All right, guys. There is this thing that I want us to learn, which is structure liquidity. Okay, we can also call it a liquidity trap or something like that. But then to make it simple, I'll just use a concept called ABC to explain it. Then at the end of the day, you go to the chart, right? You go to the chart then and see how effective it is. All right. So normally we see markets creating higher highs, higher lows, higher highs, and higher lows like this. Higher high, higher low, higher high. Okay. Yes. Then on the downtrend too, you see lower low, lower high, lower low. You get it? Yes. But with the idea or with the information that we had already, these our mentors always tell us that once markets break out the structure here, we pick our entry from here. We break out the structure here, we pick our entry from here. Break out our structure, we pick our entry from here, which was working effectively. It was working effectively. Trust me, it was working effectively. But now there have been the market has always been liquidity and structure, all right? So we are going to focus on a simple concept that I know that it would make sense to you and it will change a lot of things in your trading. All right. So this is called the ABC concepts, which it helps you to spot liquidity, right? It helps you to know where the next liquidity is, where price is likely to take the liquidity that price is likely to take before maybe it will push the upside or it push to the downside or it goes to anywhere. All right. So this is it. This is the structure. Okay. So here is our A structure, our B and C. Okay. So always our B level is our liquidity point. So what will be expecting is that we will be waiting for price to come and take this B level. Okay. Then we take our buy trade to and target the C level as our exit area. Or sometimes price will just come, it will take the liquidity level, which is our B level, then react from here. All right, react from here, then react from maybe a zone within this leg, then it goes to the upside. So these are the two things that are likely to happen. You get it? Two things. It's either price will just take out this liquidity, then it goes to the upside, or you take out liquidity, continue to the downside, and react from a zone, then it goes to the upside. Then your take profit will be the same thing applies with sell trade. All right. So this is the ABC concept that I'm trying to explain to you guys. So it's simple. It just helps you to spot your liquidity areas. Okay. So just ignore this one. I know it requires a lot of patience because always we want to once price comes to here, we are in a hurry to take a sell. And one thing is that you will try to pick a sell here, and the funny thing is price will just come, it will react, it will push small, then maybe we take out the high, then it will sell to the downside. You get it? Yeah. So we just want to treat a simple concept, just simplify everything. It's either when price comes to the downside like this, we are just waiting for price to take out this high, then we'll pick our sell trade, or we will wait for price to react from any zones here, then we pick our sell trade to the downside. I don't know, then don't let me confuse you. So is this, sorry, is this, okay? So we are expecting two things. It's either we have a zone here or this is our liquidity. Okay, you just need to trade just one setup. It's just one setup that will make you profitable in this market. So it's just one setup. So you see that price will come, we took out the liquidity, then react from here, or price will just take out the liquidity and we'll continue on the sell side, the sell to the downside. All right. So this is just it's a simple concept. It happens on all time frame. Okay, whether the 5 minute, the 10 minutes, the 15 minutes, or the 1 hour or anywhere. So in the bigger picture, maybe you might be having this. You might be having this, this. You get it? Then we might be having this. Then maybe we've got another push like this. Let me try then. I'm trying to create something and yeah, then maybe before we will get to the upside. So you can see that here was our B level, which is our liquidity and major liquidity. Okay, here is our major liquidity. Then here was these were just an internal liquidity structures. You could see you could see that even the internal liquidity structures we had ABC structures in it. You can see you have A, B, C, price came back, took out, then went to the upside. You had A, B, C, markets came back, took out this high and went to the upside. And then we came back to clear this major liquidity point that prices took to the upside. So this is something that happens in the market all the time, all the time. Right? I will tell you that every day this thing happens. Okay, so it's up to you to learn how to spot them, then use it to your advantage. Don't sleep on it. Okay, don't sleep on it. It's a very simple concept. So let's try then find out what I was trying to share with you guys. It happens everywhere, everywhere in the charts that I'll pick, you see this thing. Get it? So let's go to one okay, so that I'll be able to spot some of them for you to see. Let's focus here, here, here alone. Let's focus here alone. So you can see that we had this in the bigger picture, we had this push the upside, and this. Okay, and price came back. Here is our liquidity. It came back to take out the liquidity and continue on the down sale. They sell to the downside. You have so this place will be our target, our B level. So let me draw it again for you to see. It's A, this is our A, this is our B, this is our C. You get it? Then price came to clear our B, which is the liquidity, then it sell to the downside. It's a very simple concept that requires patience. But then you need to treat every time frame separate. You get it? So this is a 1 hour time frame structure thing. But you could see that within this 1 hour structure thing, there was also an ABC structures forming. There was ABC structures forming here. Okay, our price came back into the A and B. Yes, it took both. But then that has not changed our concept. You could see that we had this within these areas too. We had this A, B, C, which markets came, then cleared the B line here, and it pushed to the upside. You get it? So before price was coming back to take out this B level, you could see that it created these things within it before it went to the upside to continue the proper structure. You get it? So the same thing, if you go to the 15 minutes, you will see the same thing forming there. It happens all the time. Bro, this thing happens all the time. So this is it. A BC structure, these are liquidity points. So what you will be doing is that it's either you wait for price to move above these levels, then you pick your trade to the downside. So wherever you put your the C level will be your take profit areas. Don't forget. So it's either your zone will be here, which is this fair value gap or something. I don't even trade this stuff, but then that is it. Or maybe we will have we'll wait for price to come to it. Maybe a zone here for a push to the downside. You have for a push to the downside. So it's the same thing happening every day. All right. In order to be profitable in this industry, you just need to trade just one setup, one same idea, one same thing. That is what is making all these traders that we see them to be the gurus or something profitable. Okay, you can see that we had this same ABC structure here. Price came, took out this high. You get it. We had this ABC structure as well. I don't know if you saw it, this ABC structure price reacted from here. This is our liquidity area. You get it. This was our liquidity area. The price came to react from there. You get it? So that is it. Don't play with this thing. I've backtested this several times and I know it works. Okay. And so within this leg two, you can see we had this A, B, C structure. Price took out this liquidity, then he pushed it outside. To, and pushed it outside. Or price just came and react within this zone and it pushed it outside. Then don't forget that even within these areas, even within these legs, this which is our ABC structure, which price we're waiting for price to come and clear this outside movement. You could see the price just came, it cleared, and it pushed to the downside. But then within this leg, within this B leg, okay, you could see we had this ABC, price came, it took out this, it reacted from here, then it pushed to the downside. You could see it. So this is something that is very effective. All you need is to be patient enough to wait for price to take out the high, your B leg, which is the liquidity leg. Okay. Yes, I just want to make it very simple. That's why I've used ABC for so it's like it will be very easy for you to grasp it. All right. It will be very easy for you to understand it. So let's go into it. You had this A, B, C leg, right? So these are A, B, C. Our take profit will be at the C level here. So you could see that price just came. It took out this is our major liquidity. Okay, and this is where it is an internal liquidities. Price came back. It took out this, then it went to the upside. You could see that we even had another ABC structure. This will be very clear on the 15 minutes ABC structure. We reacted, then boom to the upside. So this thing is very powerful. It's very, very effective. It's up to you how you use it. If you're able to spot the liquidities, fine. You could see we have A, B, C here. Price were not able to price failed to come to these levels to clear. I'm sure price would have come to this area, then it will push to the upside. But then don't forget that within these ABC legs, we always have another ABC structures forming within those legs, which will be very clear on the lower time frames or something like that. But you could see from here that here we had this A, B, C. Sorry, is this? Let me draw it very well, very clear for you. A, the A level is here, B here, then the C level. So you could see that price came, it took out this. These are major liquidity, but then took out these, then went to the upside. You get it? So it happens all the time. It happens most of the time. You could see we had this ABC leg here. We had this ABC here. Alright, price took out this high. It reacted from a zone here, which came back to the downside. But don't forget that even from these legs too, we had this ABC leg that price came back to take out, then he pushed to the upside. Within these legs, we have a lot of ABC leg as well. Here is our ABC leg. ABC leg, which is our this is just to help you know the next liquidity, the actual liquidity, then you trade from it. So with this one, you are just interested in price taking out this liquidity level, then you take your trades to the upside. So you could see the same thing happened and price came to react from this thing here to the upside. And even in the bigger picture, you could see we had ABC this year, which price came, we took out this major liquidity, we took out these internal liquidities, then now it start to push to the upside. Don't play with this. I've really back tested this and it's very effective. I'll do a back testing video and add it to this video. So this is a very simple structure concept that you can trade. Okay, you can trade. It's very, very simple. It helps you to know the next liquidity so that you can ignore some zones, right? I'm very sure that a lot of us would have been waiting to take trades from here. A lot of us would have been waiting to use this as our zone to pick a trade from. But then, yes, we had this, all right. But then you could see that we had this internal ABC leg that price came back to take out, then we push. And even within here, it happens all the time. Like it happens several times. All that you need to just build confidence. Once it forms, okay, you take advantage. Okay, then you could see that in the bigger picture too, we had this, we had this A B C leg, right? That price later came back here, down here. It took out that one. We reacted from this, then we pushed small. Then before we got the sell to the downside. And even within these legs too, we had this ABC structure forming. You could see ABC structure. So maybe somebody would be thinking that okay, this is a zone, you go to push, this is an imbalance, so I'm trying to pick a trade from here, and you pick the trade and you'll be in a loss. Then the sad part is after taking you out, price will just react from these zones. So we are just trying to ignore some of the supply and demand levels, and in order not to be the liquidity. All right, so they have this saying that it's either you find the liquidity or you will become the liquidity. So this is how we will manage to find the liquidity in order for us not to become the liquidity. Wow. So you can see we had this push to the downside. Then we had this ABC structure. That price actually did not take this high, but then you could see that within this whole leg, we had another ABC structure. That price came back to react from here. Okay, so just once the structure forms, you don't have to wait. All right, take advantage of it. This is our ABC concept. I'll do a backtesting video and add it to it. Just a 10 minutes or 20 minutes backtesting video and add it to it. So it's very simple. It requires a lot of patience. Don't be in a hurry to take any trade that will mess up your psychology and everything. Don't be in a hurry, man. Just spot it, wait for price to take it, then you are good to go. You just take your buy trade or your sell trade from there. So it happens all the time. It happens all the time. It happens all the time. You could see these things happen all the time. ABC structure, price did not come. All right, fine. But then you could see that within this leg, we had this ABC structure. Okay, price came back, react here, and it pushed to the outside. So it happens most of the time. Okay. So in order not to fall prey to most of these things, you just have to focus on this one. So you could see in a bigger picture, this is an ABC structure. And even if you try to even focus here, you could see that here is an ABC structure, which here became a liquidity point price to that one. And it went to the downside. You get it? So you combine trend with it, okay, trend and structure with it, and you are good to go. You could see we had this push, this okay, price came back, you took out this high, then boom, it goes down. You get it? You could see we had this. Let me clean this one so like you see it very so that you see it very clear. So we had this ABC structure. We took out this liquidity point. We acted above this. Then boom. Yeah. So this is a very little thing. This is a very simple thing that I've realized I've seen in the market that I want to share with you guys. I hope we all will just take time and make sense out of it. All right, don't just be playing. You can just stick to this concept alone, and you'll be fine. I've seen it happening on the 5 minute, 3 minutes. Whether you're a day trader, a swing trader, everything it works. It works like magic. Even if you go to the daily time frame, you will see the same concept. So peace out, guys. Find another concept and we learn together. A B C. Boom. Yeah. So that is it. I'll do a backtesting video and share with you guys. Let's do it again.